There's a number that silver traders circle on their charts the way pilots circle storm systems, not because they want to fly into it, but because once you cross it, everything changes. That number just got crossed. Silver has broken its 200-day exponential moving average, and depending on which side of that line the price lands on next, we could be looking at two very different stories for silver investors in the months ahead. And one of those stories isn't pretty. Welcome to Silver Signal, the channel where we track what the charts are actually telling you, not what the headlines want you to believe. If this kind of deep dive market analysis helps you think more clearly about your silver investments, hit that like button and subscribe. We put out this kind of content specifically for investors who want real signals, not noise. Now let's talk about what just happened and why you should care. The 200-day exponential moving average is one of the most watched technical indicators in all of financial markets. It doesn't matter if you're looking at stocks, crude oil, currency pairs, or precious metals. Professional traders, institutional desks, and algorithmic systems all have one eye on the 200 EMA at all times. It's not magic, but it becomes a self-fulfilling signal when enough large players treat it as one. And right now, silver has crossed that line. The question every serious silver investor needs to answer is this a breakdown or is this a breakout in disguise? Here's where things get interesting. Historically, when silver tests its 200 EMA, it rarely does so quietly. Look at the moves in 2010, 2016, and again in late 2022. Each time silver crossed this average, the months that followed brought volatility. But more importantly, they brought direction. The market made a decision, and that decision, once made, tended to hold for a meaningful period of time. We're at one of those decision points right now, but here's what most commentary misses. The direction of the cross alone isn't the whole story. Context matters enormously. Right now, silver is moving inside a broader environment of industrial demand growth, monetary uncertainty, and tightening physical supply. Factors that don't show up on a price chart, but absolutely show up in price behavior over time. The 200 EMA break is the technical signal. These fundamentals are the engine underneath it. Let's look at what this kind of break has meant in previous cycles. In 2016, silver crossed below its 200 EMA in a way that spooked a lot of investors. Sentiment turned negative fast. But within 2 quarters, silver had reclaimed the average and staged a rally that surprised even seasoned observers. Why? Because the underlying demand picture hadn't actually changed. The break was a shakeout, a moment where weak hands exited and smarter, longer-term positioning quietly entered. Then look at 2020. Silver broke below the 200 EMA sharply in March during the global panic sell-off. The drop was steep and fast, but the rebound that followed was one of the most powerful percentage moves silver had seen in over a decade, nearly doubling in just a few months as industrial demand signals re-emerged and monetary conditions shifted in silver's favor. Now, nobody is saying history repeats itself in a straight line. It doesn't, but patterns do rhyme. And right now, several of the conditions that preceded those rebounds are showing up again. Watch for what happens in the next few weekly closes around this EMA level. That's the confirmation traders will be looking for. Here's another layer that doesn't get enough attention. The 200 EMA carries different weight depending on trading volume and market participation. A break on low volume with thin participation tells you something different than a break on heavy, deliberate selling or buying. When you layer volume analysis on top of this EMA cross, the signal becomes significantly more readable. And what we're seeing right now in silver's volume profile is worth examining carefully. There's also the commitment of traders' data sitting underneath all of this. Institutional positioning has been shifting in a way that deserves your attention. Large commercial hedgers and managed money have been adjusting their exposure in ways that don't always make headlines, but they tend to show up clearly in the price action a few weeks later. When the COT data starts pointing in one direction and the 200 EMA is being tested at the same time, you're looking at a convergence of signals that experienced silver watchers take seriously. And then there's the gold to silver ratio, which continues to sit at historically elevated levels. That ratio is essentially a valuation barometer, and right now it's telling us something that silver bulls have been waiting to hear for a while. When this ratio eventually normalizes, silver tends to move faster and harder than gold. The 200 EMA break could be the early warning that this normalization process is beginning, or it could be a pause before another leg down. The data will tell us which. So what should a silver investor actually do with this information? First, don't react emotionally to a single indicator. The 200 EMA is important, but it's one data point inside a much bigger picture. Second, watch the weekly close. A single daily close above or below this average means less than a confirmed weekly hold. Third, pay attention to what the dollar and interest rate environment is doing simultaneously. Silver doesn't move in a vacuum. The macro backdrop matters. What we're tracking at Silver Signal in the weeks ahead is straightforward. Can silver price defend or reclaim key levels around this EMA? What does volume say about the conviction behind this move? And what does the broader precious metals complex, gold, platinum, the miners, tell us about whether this is sector-wide or silver-specific? These are the questions that will shape the next chapter in silver's price story, and we'll be here, breaking down every signal as it comes in, without hype, without guarantees, just clear analysis based on what the market is actually showing us. Before we wrap up, I want to hear from you. Do you see this 200 EMA break as a warning sign or a buying opportunity in disguise? Drop your take in the comments below. The Silver Signal community has some of the sharpest precious metals thinkers anywhere on YouTube, and this is exactly the kind of moment where that conversation matters. If you found this analysis useful, share it with someone who's watching silver right now, and if you're not subscribed yet, now is a good time, because the next few weeks in this market could move fast, and you'll want to be here when we break it down. Stay analytical, stay patient, and as always, watch the signal, not the noise.